Hello everyone, I'm Sunil from Vision Inc. Today I'd like to present our financial results briefing for the fiscal year that ended in December 2025. First, here are the highlights for the fiscal year that ended in December 2025. Net sales increased 9.8% from 35.528 billion yen last year to 39.012 billion yen, marking a record high. Operating profit also increased 20.5% from 5.365 billion yen to 6.465 billion yen, again setting a new record. By segment, the Global Wi-Fi Business increased net sales from 19.875 billion yen to 21.011 billion yen, achieving a record high. Segment profit also increased from 5.987 billion yen to 6.351 billion yen, also a record. For the Information and Communications Service Business, net sales increased 13.2% from 14.49 billion yen to 16.406 billion yen, setting a record high. Segment profit also increased from 1.693 billion yen to 1.746 billion yen, also a record. For the Glamping and Tourism Business as well, net sales increased from 1.155 billion yen to 1.581 billion yen, setting a record high. Profit also increased from 119 million yen to 176 million yen, also a record. We continue to set new record highs for both sales and profit. Next are topics on consolidated performance. We have been saying that we will make proactive investments over these 2 years, last year and this year, and this is where we stand on the breakdown. As mentioned earlier, operating profit came to 6.46 billion yen, while we made proactive investments of 840 million yen. We invested mainly in 3 areas: New York, World eSIM, and accounting BPO. As a result, sales increased by 1.274 billion yen attributable to these investments. Next is the performance change for the Global Wi-Fi Business. As you all know, last year saw a very low number of outbound travelers. I will explain the time series travel trends later, but compared to 2019, overseas travelers have decreased significantly. Even so, why have we been able to grow? Factors like the weak yen and population decline are pushing companies to expand globally more actively, and we have steadily captured that corporate demand. Individual demand has fallen sharply, but we have offset that loss and continued revenue and profit growth. Meanwhile, inbound demand has been increasing, including SIM sales at airport counters for Ninja Wi-Fi, and we have captured that as well. We are also making active investments to drive adoption of our New York subsidiary and World eSIM. Next are the changes in the number of travelers for the Global Wi-Fi Business. This chart shows the recovery by quarter versus 2019, but the full year recovery remains only at 73.4%, and this situation continues. As you are aware, with the weak yen and widening domestic-overseas price gaps, individual travel has not recovered much, and I believe you recognize that. On the other hand, inbound is the opposite. Travel and shopping are very affordable now, so many people from overseas are visiting Japan. Inbound continues to surpass past record highs. Next are net sales and usage volume for the Global Wi-Fi Business. Compared with the past peak, 2019, the number of transactions is still just under 100,000 on a volume basis. However, in terms of net sales, Since we target people traveling overseas, the corporate and inbound portions I mentioned earlier are contributing more and more. Even though volumes are down compared with 2019, sales have increased significantly, resulting in record high sales. Next are the customer attributes for the global Wi-Fi business Outbound. As you can see in this graph, 64% of transactions by count are corporate. By sales, the ratio increased from 70.9% last year to 75.2%, showing a growing contribution in sales terms as well. Also, regarding new versus repeat usage, the repeat rate has increased from 62.3% to 68.2% by count, and from 65.1% to 70.4% by value. Even among the reduced number of overseas travelers, we are steadily acquiring new users while encouraging existing users to use our service repeatedly, thereby maintaining growth in profit and sales. Next is corporate usage in the global Wi-Fi business. As explained, the corporate weight is rising not simply because they are using it, but because we are prioritizing official corporate registrations. When companies travel overseas, we provide dedicated pages and offer service features that make it easy for a wide range of corporate customers to use. As a deeper version of that, we offered Global Wi-Fi for Biz, which can be kept at the office and used both domestically and overseas. Corporate registrations have now exceeded 72,000 companies. Global Wi-Fi for Biz has also been rising steadily to 13,434 accounts, and 30% of listed companies in Japan are already using it. There is still room to grow, but please understand this is the current situation. Next is World eSIM within the global Wi-Fi business. As you know, World eSIM and global Wi-Fi have completely different roles and performance characteristics. Companies tend to use global Wi-Fi, and when families or friends travel together, sharing to use it cheaply and using global Wi-Fi for high-speed communication has gradually become the standard. On the other hand, for solo travel or small groups staying only in major cities, if they go a bit off the beaten path, World eSIM often cannot be used. So people are gradually recognizing how to use each service appropriately. Within that, for example, many people go to Korea or Taiwan alone or in pairs, so we want to focus there, of course including those traveling globally. We are also capturing segments we previously could not, including people who used to buy SIMs at airport SIM counters. As a result, both sales and profit are growing steadily. As you can see from this time series graph, there is some seasonality, such as student trips and summer vacation, so there are still fluctuations in the upper range. But viewed over the full year, it has grown significantly. Also, we are providing services not only from Japan, but also to users from other countries traveling to other countries. We are making upfront investments there, but World eSIM is gradually expanding as well. Next is the performance change for the information and communications service business. As you can see from the time series graph, sales have been growing steadily here as well. Profit is slightly pressured because we are actively investing in accounting BPO, but we are still renewing record high profit while strengthening investment. As you know, we have a variety of sales channels, so we actively adjust our approach and grow where demand exists. Similarly, for products and services, we gradually change our front-end offerings and portfolio in response to seasonality and various conditions, and provide them in line with user needs. Accounting BPO is shown as an upfront investment for future growth. We already have 3 locations near headquarters and near our Osaka sales office, and have hired a significant number of people. So we are expanding while absorbing those costs. Next is the gross profit composition. This relates to the information and communication service business. Rather than explaining in detail, I think you can see from the materials how the portfolio changed between 2024 and 2025, what grew and how things shifted. Because needs change, having multiple products is a strength that enables us to respond very quickly and strongly to these changes. Going forward, we would like to continue developing good products in line with customer needs, and also proactively pursue M&A even within this area. Next is the performance trend for the Glamping and Tourism Business. Both Yamanaka-ko and Koshikano Onsen are maintaining high occupancy. For high value-added inbound travel, we support inbound visitors coming to Japan through plans created with travel agencies around the world, and this is also growing steadily. In glamping, we plan to open on Awaji Island in early next year, and it's a location with a great setting and excellent hot springs, so we are very much looking forward to it. Overall, the Glamping and Tourism Business is trending favorably. Next is company-wide recurring revenue, which has also been growing steadily. It currently stands at 2.68 billion yen. Originally, the base was recurring revenue from manufacturers and carriers, but we have developed recurring revenue from our own services and steadily increased its weight, so we would like to continue expanding this. Next, we present quarterly trends in full year performance. Because the vertical axis shows the years, you can see how sales and profit have grown. In the fourth quarter this year, we exceeded 10 billion yen for the first time on a quarterly basis. In fact, the fourth quarter used to be the off-season for global Wi-Fi, but now, because corporate customers travel significantly, it has shifted into a busy season. We are working on the ground to mitigate the effects of seasonality, so we believe this will gradually rise further. Next is the full year performance forecast. We plan to deliver our business strategy in a separate video, so please be sure to watch that. Here I will explain only the portion cut out for the fiscal year ending December 2026. We expect record highs of 42 billion yen in sales, 7.5 billion yen in operating profit, 8.448 billion yen in EBITDA, and 5.1 billion yen in net profit attributable to owners of the parent. Next is the full year forecast by segment. For global Wi-Fi business, growth may appear to have slowed, but until now we made plans on the assumption that overseas travel would steadily recover. However, since it has not recovered much, and as we have been discussing, we will more clearly shift the portfolio toward capturing more corporate demand, so we have presented somewhat conservative figures. Because the situation of overseas travel not returning has continued for several years, we hope you will understand this. Meanwhile, for information and communication service business, we plan to grow from 16.4 billion yen to 18.1 billion yen, an increase of over 10%. For the Glamping and Tourism Business, we aim to grow from 1.58 billion yen to 2.09 billion yen, over 30% growth. Regarding segment profit, Global Wi-Fi Business is planned to increase from 6.3 billion yen to 7 billion yen. One characteristic to note is that profit changes are larger than sales changes. Information and Communications Service Business is also planned to grow over 30%, from 1.74 billion yen to 2.33 billion yen. Glamping and Tourism Business is planned to rise from 176 million yen to 233 million yen, a 15% increase. We will work hard to achieve record highs in each segment. Next are the assumptions for the fiscal year ending December 2026. First, the exchange rate is set at 155 yen. Last year we set it at 150 yen, but given the continued yen depreciation, we set it at 155 yen. Overseas travel recovered to around 72 to 73%, but we set this year's recovery rate a bit conservatively at about 75%. We also factored in proactive hiring of about 40 people. In addition, we will invest in promotion for World eSIM within Global Wi-Fi and in New York. In the Information and Communications segment, we will continue investing in data-driven sales centered on accounting BPO. While making these investments, we aim to improve profit margins and expand recurring revenue. As for the Glamping and Tourism Business, as previously explained, we are also considering proactive M&A outside the base assumptions. We will provide further details in our business strategy video, so please refer to that as well. Next, I would like to introduce our group companies, including several companies we have acquired through M&A. First is Adval Corp. These spaces, like Glade Park Shibuya and Glade Park Omotesando, are not limited to social gatherings, but are also actively used for business events with entrepreneurs and various purposes. Naturally, our existing group customers are also making active use of them. When we acquired the company, the COVID-19 pandemic created a challenging environment in 2022 and 2023. Nevertheless, the business has grown steadily and has now reached nearly 2 billion yen in annual sales. We intend to continue expanding this business. Rather than simply increasing the number of facilities, we focus on identifying high utilization locations and enhancing value by increasing optional services to meet customer needs. Our new location, Glade Park Shinjuku Ekimae, has opened next to the well-known Alta building and is operating at a very high utilization rate. In addition, we have opened another one in Ginza, directly in front of Shimbashi Station, on the opposite side from the SL Square exit, which is also steadily gaining popularity. Through these M&A initiatives, and by generating synergies with our existing businesses, we continue to expand and strengthen Adval Corp. Next is Alpha Techno Inc, which we acquired quite a while ago. At the time of acquisition, its annual sales were approximately 300 million yen. Today, the company has grown to over 1.6 billion yen in annual sales. The company provides office design, interior construction, and restoration services. Many Vision Group customers expand or relocate their offices, and restoration work is often an area where pricing transparency is lacking. We address this by providing transparent and competitive pricing while maintaining profitability. In addition, we create dedicated landing pages for specific services such as partition installation, flooring work, and electrical construction in order to drive targeted customer acquisition. Originally, the company did not actively utilize the internet. However, It has since transformed into a business that extensively leverages online marketing, and as a result, it continues to grow rapidly. Next, regarding dividends. While maintaining a sound financial position and continuing proactive investments, we are committed to delivering stable shareholder returns. Under our business strategy through 2028, we aim to maintain a dividend payout ratio of 50% or a dividend on equity (DOE), whichever is higher. In this 3-year time series, the dividend for 2025 totaled 50 yen, including a commemorative dividend of 5 yen. For next year, we forecast dividends of 22 yen and 29 yen, totaling 51 yen. Compared to last year's 45 yen plus the 5 yen commemorative dividend, we aim to increase dividends by 6 yen. Lastly, regarding IR-related initiatives, we understand that everyone actively uses different tools such as X, Note, Facebook, email newsletters, and integrated reports. In order to reach as many people as possible and to help them learn about Vision Group, we will proactively utilize social media. If you subscribe, we believe you will be able to stay up to date with timely information about Vision. We appreciate your continued support. Thank you very much for watching this presentation. The recovery of overseas travel remains challenging in 2025. Normally, it is natural that when the market in that industry declines, both sales and profits would also decrease. For example, even with copykey.com, the number of companies and units in the market has been decreasing. However, through our continuous targeting and analysis, we have achieved growth, even in contracting markets. By eliminating unnecessary intermediary costs, maintaining reasonable pricing for customers, and improving sales efficiency and productivity, we are able to increase both total gross profit and gross profit margins. As one unified team, we will continue striving to grow and contribute to society, even under challenging environments. We sincerely ask for your continued support in 2026. Thank you very much for spending a long time watching this briefing.